It's another Friday in Finance here at Brookstone Financial. Hopefully last week you had the opportunity to watch our very important video announcement regarding the Secure Act of 2019. Now the name may seem somewhat ironic, the Secure Act, right? Well, this is probably the most significant proposed changes to retirement accounts in years. So two changes to note, or two potential changes to note, would be number one, the delay of the required minimum distribution from the current age of 70 and a half, because that's when you're forced to start taking money out of your retirement account, to the age of 72. Now at face value that may seem like some good news, right? I'm not forced to take money out of my retirement accounts as early as I used to be. Now we speculate that the factors used to calculate the distribution may be lower, therefore the amount that you take out at 72 may be higher. The other more significant change to note, though, is the fact that the stretch IRA may be no longer. It may be going away. So as it stands today, a non-spouse beneficiary, being your kids or your grandkids or maybe another friend or a family member, if those individuals were to receive your IRA, again this is a non-spouse beneficiary, they could stretch those distributions from that IRA over their lifetime and take out small amounts each and every year. Basically what that says is, well, we're able to slow down taxation, therefore potentially receiving a larger benefit out of the entire inheritance. Well, let me tell you something, folks. With $20 trillion worth of national debt, or $20+ trillion, and it's mounting, the government needs the money. Someone has to repay this enormous amount of national debt. We've been talking for years with our clients about being cautious about making too much of your portfolio tax deferred or over contributing to tax deferred accounts, right? You need to diversify amongst tax structure. So with these proposed changes, the taxation of your retirement accounts may be sped up, therefore forcing more taxes out of your accounts over a shorter period of time. So first of all, if you haven't heard of the Secure Act of 2019, and this passed recently, I believe it was May 23rd, passed overwhelmingly in the House, 417 to 3, so it's likely to be signed into law. There's no assurance of that, but stay tuned. But if you haven't heard of this, you need to contact us at Brookstone Financial. You can call us at 866-945-3220, or you can visit us online at brookstonefinancial.com. But let me explain a couple of strategies to potentially combat the changes of the Secure Act of 2019. One, I believe that Roth Conversion conversations are going to become even much more relevant today under the Secure Act, because now that's a way to pass or transfer to non-spouse beneficiaries a tax-free legacy. So even if they're forced to take it out over 10 years, it's not causing any unnecessary taxation on other benefits such as pensions and Social Securities. So Roth Conversion conversations are going to become, again, even more relevant. Another strategy that we've been utilizing for years, but again, I think that the proposed changes are going to make this strategy more relevant, is utilizing required minimum distributions, if in fact you don't need the money to supplement your income, but utilizing those RMDs in a legacy strategy to transfer a tax-free inheritance to the next generation. And let me show you how that's done. So first of all, let's assume that you have an IRA, and actually this could even be a 401k. Under the current rules at 70 and a half, and again this is a proposed change, this could be 72 in the near future, but at some point you're forced to take required minimum distributions out of that account each and every year. Whether you need the money or not, you're forced to pay taxes on those required minimum distributions. Well, in many cases, we use a client's RMDs. If in fact they don't need them for supplemental income, we reposition them or utilize those to purchase a life insurance policy. Now you may be thinking, wait a minute, Seth, I don't need life insurance. I don't have any debt. This is a phenomenal tool to transfer wealth from one generation to the next. A lot of our successful high net worth clients utilize this tool right here to leverage and transfer a tax-free inheritance to their kids or grandkids. So let's say you utilize this strategy and then ultimately down the road you pass away, right? So what are your kids or grandkids going to receive? Well, first of all, they're going to receive the remainder of your IRA. Now that portion would be taxable, and that's kind of up in the air whether they're going to be able to stretch it or stretch it over maybe 10 years or take it out in a lump sum, but whatever is remaining of the IRA again would still go to the kids and grandkids. Now the life insurance though will also go to kids or grandkids or whoever you name as beneficiaries, but most importantly this piece is going absolutely tax-free with a lot of leverage and safety as well. This is a great strategy. It's interesting because a lot of times when we say life insurance, again, people are like, oh my gosh, I don't need life insurance. Call it what you want, but I call it a very tax-efficient transfer of assets from one generation to the next. The issue is you've got to be careful with the type of life insurance that you use. There are policies out there that have many moving parts and what-ifs and assumptions. That's where it gets a little scary. Stick with a simplified form of life insurance where most of the numbers are locked down and you don't have all those what-ifs to worry about. If you'd like more information about this strategy or many of the others offered by a Brookstone advisor, please give us a call. Again, it's 866-945-3220, or you can visit us online at brookstonefinancial.com. If you want to take advantage of that complimentary consultation, you'll also receive a copy of my new book, Innovations in Retirement Planning: How to Get More Out of What You've Got. We'll see you next week here at Brookstone Financial.